All right. Good morning, everyone. Good morning. Thank you for joining this presentation. Can you guys hear me? I don't know if I muted you guys, but I can see you, Crystal. Can you hear me?
Okay.
Okay, beautiful. All right. Um, welcome to this presentation. I appreciate you guys for joining. My name is Mario Gonzalez. I'm one of the founders of Life Designers. Um, Today, I'm just going to be doing a quick explanation, informational video on how to understand your credit report. I know many of us, we, get confused in this area, and there's a lot of things on our credit report that can be, misleading. So I'm just going to go ahead and break down some of the things to look for, some of the things that you can even correct on your own spare time. So really quick, just a little bit about Life Designers and what we do. We're a consulting company where we pretty much develop a financial map for your to live the life of your dreams. Life Designers is pretty much just that. We design people's lives. We specialize in credit repair, credit design, personal and business funding, loans and lines of credit, and even going beyond just getting the funding you need. We show you what you do with the money, how to invest it, and how to grow your business. And we develop our relationships with our clients long term. So without further ado, let's get started. I'm going to get right into the first slide. Let me get here for you. So how do we read our credit report? Me personally, and I know some of my team agrees with me, credit scores they're bogus numbers, in my opinion. Not saying that credit scores aren't accurate. It's just that there's a lot of things on your credit report that may be misleading or improper that can generate a bogus score. So it's very important that you pay attention to your credit report in detail and not just the credit score itself. There's many factors that can affect your credit score. So always make sure that you pay attention to your credit report. Even if you're debt free and you really don't care what big banks and lenders think of you, you can't just ignore your credit report. You always should still check it for errors and any types of signs of fraud. At least I recommend once a month. There's many platforms out there where you can monitor your credit, many monitoring agencies that you can use. But I recommend that you at least keep an eye on your credit once a month just to check for any signs of new accounts or any type of fraudulent activity. It's important to do that. It can be kind of confusing. Let me just lower this screen here. All right. But if you don't, especially if you don't know how to read your credit report or what kinds of flags to look for, but it's important to keep an eye on it. I know it can be a lot to take in. The credit report is a lot of information on it, and there's many different things that you have to look out for. But not to worry, Life Designers, we've done a lot of the heavy lifting for you, so you don't have to. And we'll walk you through everything you need to know about reading your credit report. So first and foremost, what is a credit report? Think about your credit report as kind of like a report card for your credit history. Many lenders, many potential lenders can use this to determine your risk. And your risk is basically how likely you are to pay your monthly payments on time. So if you're going to take out a loan or a credit card, they determine that risk to see how they're going to get paid back, in essence. So some of the things on your credit report, these are basic things that you'll find on your credit report. Obviously, the date you opened any credit account or loans. It'll show the date you opened your credit card, any loan, any car note. It'll show that, obviously, because, that's important. It'll show the balance on each account. So if you have a car loan and you've paid off, $5,000 towards the car loan, and the car loan was maybe $20,000, it'll show a $15,000 balance. It'll show your payment history. Now, your payment history is important because any new lenders or any future lenders, they're going to want to see how well you've maintained your payments over the time you've had that account. And that's very important in determining what score they're going to assess for your profile. So obviously, it'll show your payment history. It'll show any type of credit limits and your total loan amounts. So if you opened up a credit card for, $5,000, $2,000, it'll show that limit. It'll show any delinquencies. This is another important factor when determining your credit score. These delinquencies include anything from bankruptcies, tax liens, foreclosures, repos, collections accounts, things of that nature. Delinquencies are a main factor in determining your score, and of course, any type of identifying info like your name and address and social security number. And we'll get into the identification info in depth a little later on. But these are the basic things to look out for what's contained in your credit report. Let's get over to the next slide here. So these are the three major credit reporting bureaus, Equifax, Experian, and TransUnion. A credit bureau is pretty much a reporting company, and these reporting companies will provide information to whatever company may be considering giving you a loan or a credit account. They all operate independently. So Equifax, Experian, and TransUnion all operate independently. So the reports may contain slightly different information depending on the credit reporting company used. So you may see a score on Equifax that's different from Experian or TransUnion. They have nothing to do with each other. They all operate independently. So sometimes, certain lenders will report on Equifax only, or Equifax and TransUnion, and not report on Experian. And that may fluctuate your scores because it's not reporting on all three. So if you ever see any, you pull up your credit report and you see that your three scores are different, it could be because that particular lender or creditor is not reporting to all three bureaus. And now there's something called a FICO score as well. And we'll talk about a FICO score later on. So we'll get to that in another slide. So how do you get a credit report? Let me just admit somebody here. Well, you as a United States citizen are entitled to one free credit report every year from each of the major credit reporting agencies we just talked about. So you're entitled to one free credit report. You can contact them, and they are required by law to send you a credit report every year. They're not automatically mailed to you. Obviously, you have to contact them for it. And each of these agencies, they keep different details on file. So obviously, it's worth checking all three of them to find out what's going on with your credit report. And if you play your cards right, you can stagger them so you're getting a free report nearly every quarter. So you can get a free one every year by contacting them. You can open up a credit monitoring service. For those of you who are familiar with Credit Karma, there's a company that we use called Identity IQ. There's many monitoring agencies out there you can get your credit score from. Some banks provide you a monthly credit report through your financial institution. So that's a way you can get your credit report. So moving on to the next portion of the presentation, now that we've got you knowing how to read a credit report, let's move into some major areas that we can check for any red flags. So how do we read it? How do we read our credit? How do we read our credit report? So this is some of the identifying information that's found on your credit report. Like I said before, we'll talk about some of the ID info. Obviously, your name, your address, your social, your date of birth, and your phone number. Everything in this section needs to refer to you and not someone else. And I emphasize, make sure that it refers to you and not someone else, or maybe someone else who happens to share your same name, a similar name. So just always double check the name, always check the social security number, make sure everything is lined up, make sure everything is matched up. Make sure all the addresses listed are places you've actually lived. So for example, you may see something on your report that says, what's happening here? Sorry guys, let me get back to the slide. Something on your report that says you lived in, I don't know, Beaver, Arkansas, you know, and you've never lived in Beaver, Arkansas, but your report says that. You might want to follow up with that in detail. Your name. My dad and I share the same name. So, you know, that's something that you might want to look out for. Maybe you have to identify it or differentiate it with a social security number or the address or obviously the date of birth or the phone number. So these are things you want to look out for in detail. If you're married and maybe you got divorced and your name is, you still have a maiden name, maybe that's still showing up on your credit report. Just take time to look in detail of all these identifying factors. So your credit history. So the bulk of your report is in this section, and your credit history includes all of these accounts here, all of these sections. Open and paid credit accounts, like your credit cards, mortgages, loans, anything that you have that you've applied for credit for, it's going to show up in your credit report. If you have any joint accounts with anyone else, if you had a cosigner on a car loan, if you had a cosigner on a personal loan or a business loan, that account will show up on this on your report. Obviously, we talked about before your total loan amounts, your remaining loan balances, any type of late payments, any accounts that have been sent to collections. You know, pretty much the bulk of your report is going to be here in your credit history. Any public records, and we'll get into some public records a little later on, any bankruptcies. Some red flags, if you've closed a credit card account, obviously confirm that it's showing up closed on your credit report. Sometimes lenders or creditors will keep them open, even especially if it's reporting late or if it's delinquent. Sometimes they'll keep it open, just make sure it's reporting closed, and, you know, follow the steps to try and get that removed. Make sure there's no lines of credit that have been opened up in your name without your consent, you know, things of that nature. Some of the red flags to look for also is just reread this section and make sure everything is listed as right. You know, just constantly look at this and make sure that there's nothing on your report that is you're not familiar with. And if you aren't familiar with, you know, contact this lender particularly and find out what's going on, because it can affect you pretty drastically in the long run. So this next slide, we'll get into some public records. So obviously public records are, in fact, what they are. They're public records. They're things that are accessible to, you know, the public. When I say public, I mean just, you know, the lenders, anybody who's looking for to check your credit report. Things like this can include bankruptcies, tax liens, judgments, you know, certain judgments from court hearings or what have you. And these activities are taken all from, obviously, information on your credit report. These type of things can stay on your credit for upwards of 7 to 10 years, if not identified properly. So you can have a bankruptcy on your credit report that may not even be yours. You didn't even know. And it's just lingering on your credit, bringing your score down. It's very rare to find errors in these, but it's also, you know, worth scanning just to make sure there's no mistakes, and these mistakes can be cleared up. So those are public records. Another thing that can be found on your credit report are inquiries. Now, inquiries are pretty much anytime you apply for new credit, it shows up as an inquiry on your credit report. And it's just pretty much saying that you are looking to obtain some type of credit, and lenders want to see how many times you have applied for new credit. And there's two types of inquiries. There's a soft inquiry, which, you know, pretty much companies waiting to send you promotional materials. Sometimes, in many cases, they're just waiting to send you promotional materials or checking your account activity. And then there's hard inquiries. And hard inquiries are made obviously when you apply for a credit card, a loan, or mortgage. Now, a soft inquiry, it can happen without you even knowing. A soft inquiry, a company might check your credit score if they're planning on mailing you like a promotional offer, and normally these things don't affect your credit score. So there's certain lenders that do what's called soft pulls on your credit report, and these things normally don't affect your credit report, but they will still show up on it. Sometimes they'll show up on it. A hard inquiry, on the other hand, they require consent. So in order for, and that's the difference between soft and hard inquiries. Soft inquiries don't require any consent by the lender. A hard inquiry does. So before they can actually pull your credit report, they need your consent before this can happen. And these hard inquiries do impact your credit score and can't be legally done without you knowing. So if you notice a hard inquiry and you didn't authorize it, obviously you'll need to dispute it with that credit agency. Hard inquiries can affect your score anywhere from 5 to 10 points. They can drop your score anywhere from 5 to 10 points. So I would suggest limiting the amount of hard inquiries. Obviously, if you don't need to apply for every credit card. Just kind of manage your debt. But again, just keep in mind that these inquiries do affect these hard inquiries do affect your credit score in the long run, anywhere from 5 to 10 points. All right. So what does an open account mean on your credit report? Any line of credit you've had that's open and you never officially closed, anything that's revolving, anything in your name that's revolving, an active credit card, an active line of credit, an active loan that's open and not closed, that's something that's open, something that's current and reporting current every month to the bureaus. Says here, the department store credit card that you paid off but never closed it, that's going to report on your credit report every month. Even if you haven't used your credit card in a few years, it'll still show up as an open account on your credit report until you contact the company to close it. Now, about closing open accounts, especially if it's a good standing credit card. Let's say, for instance, you have a credit card that's aged pretty decently. Maybe it's 20 years old. And it has a nice high limit. Maybe it's $20,000. And you've maintained a good payment history with this credit card. You just don't use it. Maybe you use it every once in a while. You have maybe, you get some gas, or you maybe buy a piece of furniture, and, maybe you have a balance of maybe $300, but you paid it off and it's just there kind of, you have it. And most people, they want to close that credit card because they don't use it. Now, we recommend, as life designers, we recommend keeping that account open for 2 reasons. One, keeping good standing credit cards for as long as possible could be beneficial to maybe so this could be beneficial for a relative or family member that can be added as an authorized user on that card. Now, what an authorized user means, you have a good standing credit card that has, like I said, a nice, good history. It's aged really well. You have a good payment history. And maybe your 18-year-old son or daughter is looking to apply for new credit, but they don't have any established credit. You can add that family member or relative onto your credit card as an authorized user, and now your good standing account and your good standing history is going to reflect on their credit, in turn boosting their score. So it's not affecting you, it's not hurting you to keep that good standing open account on your credit report. It can only benefit you or benefit someone else. And in our line of work, we are able to use that particular person as a supplier for our future clients. So it's not a bad thing to keep that good standing account on your credit report. You don't necessarily have to close it. I recommend probably the worst thing to do is close that account because, it's there. It's not hurting you. It's been good for the past few years, or however many years you've had it, and it's not going to hurt you in the long run. So Now, this is another thing that you may find on your credit report, and it's called a U. It's rare, but it can show up. And a U pretty much just means unclassified. The account hadn't been updated, or maybe the account is brand new and it hasn't reported to the bureaus yet. Again, it's something rare that, in my experience, I rarely see, but it doesn't have a negative impact on your credit score, and it isn't anything really to worry about. It's one of many status codes that can appear next to your account on your credit report. Sometimes it indicates a problem on that account. Maybe it's being past due or sent to collections, but again, that's very rare. It normally doesn't affect your credit score. I've never seen it in my experience, but maybe my partners have. So that's what a U stands for. So keep out for that. Keep a lookout for that. So these are the people that are allowed, or not allowed, but these are the people who normally would want to take a peek at your credit report. Obviously, your banks, any creditors, anybody who's going to lend you new money, private lenders, insurance companies, potential landlords. Nowadays, it's almost impossible to get an apartment without a credit check being run. Obviously, collections agencies, any potential employers, which is unfortunate for some people because, work is work. And if they have to require a credit check to get a job, a lot of people will be out of work. And government agencies. Most people can't legally use your personal information to access your credit report, but these are the types of organizations that are allowed to pull your credit. So where can you find it? Where can you find your credit score? So again, if you opened up a credit monitoring service, you can see a detailed credit report, credit score. Sometimes it doesn't include your credit score. Sometimes it'll, show you a null credit score, we like to call it. There's no score. Maybe that just means that you just don't have any established credit, so you may not actually see a physical score. Here, I put some notes in here that says, keep in mind when it comes down to it, all a credit score really is an I love debt score. And not that you love debt, it just shows how well you've played the debt game. Obviously this is, something that you have to manage, and having debt is not necessarily a bad thing. And that's where most people misunderstand what it is and get confused. If you're like myself, an entrepreneur, many of my partners, or, a business owner, you're using up a lot of your debt because you need the funds to keep your business running. Obviously you want to maintain these accounts, but having debt is not necessarily a bad thing. You just have to know how to manage it. It doesn't actually reflect doesn't reflect your actual net worth. Obviously, you can have debt and you can have a bunch of money in the bank. It doesn't matter. So the only way to keep your stellar credit score is to, have debt. Obviously, you have to have debt in order to maintain a score, but you just have to manage it properly. It is possible to live a life without a credit score. I mean, not highly recommended. Doesn't mean you should trash your credit to lower it. Just start paying off your debt, and don't take on any new debt until the old debt is either paid or paid off, paid down or paid off. There's baby steps you can take to reach that score. So here, if you see the range, obviously the lowest credit score is 300 and the highest is 850. You want to be probably in that very good to excellent range. But again, when you do use your credit, sometimes you can take a couple hits, and it's not uncommon to, drop down a little bit. But just if you follow baby steps and trying to maintain your credit, I mean, you can reach that score in no time. One important thing to remember is no credit is not the same as having low credit. So you can have no credit. That just means you haven't established anything. Now, low credit means that maybe you have some accounts that are delinquent. Maybe you've been late on some payments. There's a difference. It's a little bit easier to get out of a no credit situation than it is to get out of a low credit situation. But again, we specialize in this, and you contact one of my members on my team, and we can show you how to build your credit. So now these are the score ranges. These are what the credit bureaus are reporting to you. Each of the credit bureaus will report a particular score. So Equifax will report, let's say for instance, 720, TransUnion will report 720, and Experian will report 720. But there's also something called a FICO score. And a FICO score is pretty much the same number. It's a 3-digit number, but it's based on all of the information in your credit reports. So a little bit about FICO. It was originally a company based out of San Jose, California, the Fair and Isaac Company. And what they did was they focused on credit scoring services. It was founded by two gentlemen, Bill Fair and Earl Isaac, and they developed a FICO score, Fair and Isaac FICO company. I don't know if you made that connection. But about 30 years ago, the Fair Isaac Corporation, they debuted the FICO score. And what this does is it provides an industry standard for your scoring creditworthiness. So this industry standard should have been fair, or is fair, to both lenders and consumers. So how your FICO score is calculated, it uses a bunch of different pieces of the data in your credit report. So it pretty much gathers all the data together and it comes up with one overall score. It's not all three scores combined. It's not all three of your credit bureau scores combined. It's just gathering all the data in your report to give you one overall score. And a lot of lenders look for your FICO score. Now, this data is normally grouped into 5 categories. Your payment history, the amounts you owe, the length of history, any new credit, and a mixture of all that credit. So those are the 5 areas that they use to determine your FICO score. Now, these categories may vary from one person to another. Everyone's credit report is different, obviously. But overall, your FICO score, it considers both positive and negative information in your credit report. Keep in mind, late payments, obviously, like I said before, late payments will lower your FICO scores. But if you establish or reestablish a good track record and making your payments on time, it will raise your score, obviously. So everyone obviously wants to be in the 800 club, and very few people enter that or, past that threshold. Only about maybe 5% of Americans are in the 800 club, but it is possible. So again, there's a difference, the FICO score, and there's your actual credit score from each of the bureaus. Okay, we talked about this before. Can someone run your credit report without you knowing? Again, it depends. Soft inquiries happen without consent. Hard inquiries, they need your permission to run your credit report. I won't touch on that too longer. So next slide. So how does one dispute any inaccuracies? You don't. Life Designer does it. No, I'm joking. There is a way that you can dispute these inaccuracies. Let's say you close a credit card here and it still shows up as an open account. Things you can do, obviously gather up any documents that you have that show that you've paid off that account, that you don't own that account, that the account's not yours, that it's reporting delinquent, that it's false reporting, anything that you can prove to the creditor or the lender that it's not yours or it was a mistake. Obviously gather those documents. You'll send this letter, you send all these documents by certified mail to the creditor or the lender or the bureau, and obviously don't forget a return receipt. And they have 30 days to respond to you. They'll have 30 days to respond to you. And by law, if they don't respond by 30 days, the account has to be removed. Keep in mind, any mistakes on your credit report need to be taken up with the agency that shows the error. You write a letter, you'll list each incorrect item and why you're disputing it. These are just some of the steps you can take on your own to go ahead and start disputing some of these inaccuracies if you wanted to. Obviously, it's important to avoid any identity theft. Staying on top of your credit, again, I recommend once a month checking your credit report, but you must stay on top of it. I mean, it's the perfect way to guard yourself. I mean, your credit report might seem like it's complicated at first, but I mean, it's something that you have to at least take a look at. You know, I personally would say once a week. I mean, Credit Karma reports your credit once a week, but at the very least once a month. So it's never a bad idea to be proactive and to make sure everything's always correct on your credit report, because there's a lot of identity theft situations out here, and you can be, you know, living one life and your credit report is saying you're living a complete different life. So I urge you guys, please keep in tune with your credit and make sure everything is on there. Everything that's on there, it's accurate and, you know, it's yours. So really quick, I'm gonna go over an actual credit report from, you know, this is obviously, you know, someone's actual credit report. You know, I changed the name just so we can get an idea of how it looks. But this is the personal information that comes up once you open up. I mean, this is a credit monitoring service we use. And here it is. This is the personal information. The credit report date, your name. See now, so here it'll show you each bureau: TransUnion, Experian, and Equifax. I don't know, I'm gonna attempt to use the laser here. It may have a delayed reaction, but bear with me. Here under TransUnion, it shows John Smith. Here under Experian, it shows John A. Smith. And under Equifax, it shows John Smith. This right here is the first inaccuracy. That must remain the same across the board. This is one thing you can correct on your own. You can call them and tell them to correct it. So that could potentially be something that's affecting your credit score. Here, the addresses, you know, the addresses are showing the same address. But when you look at his previous addresses, on the TransUnion and Experian, it shows the same address, but under Equifax, it shows a different address. If you're not associated with any address that's appearing on your credit report, it must go. If you live somewhere, maybe you were married and you live with your wife or your husband, and maybe their address is showing up. Sometimes, in many cases, when you apply for new credit, some of the creditors' addresses show up on your credit report. This is the area you want to look for and make sure everything's spelled correctly. Make sure the addresses are correct. Make sure your names are properly spelled. You know, just make sure everything is accurate on the personal information side of your credit report. And this is some of the things it'll show you. And then it'll go into showing them their credit report. This particular person's credit is not so great, but you see how it'll show you TransUnion, Experian, and Equifax. And if you notice, the TransUnion report is a little bit, it's lower than Experian, but the Equifax is the highest. That could be a variety of different factors. Like I said before, certain accounts may report on certain bureaus, but not on others. And in turn, that can affect your credit score. So it's not uncommon to see a fluctuation in all three bureaus.